Today, we present you with this simple yet hugely profitable standard error band strategy. Impressive equity curve, right? But before we get to the strategy proper, let's introduce you to the standard error bands indicator. What is the standard error bands indicator and how does it work? The standard error bands indicator is a technical indicator that tracks the market trend and volatility using the linear regression line and the standard error of the regression. It consists of three lines. 1. The middle line is a 3-period simple moving average, SMA, of a 21-period linear regression curve of the price. 2. The upper band is a 3-period simple moving average of 2 standard errors added to the regression line. 3. The lower band is a 3-period simple moving average of 2 standard errors subtracted from the regression line. It works both as a trend following and volatility indicator. The slope of the linear regression line, the middle line, shows the direction of the trend, while the narrowing or widening of the gap between the upper and lower bands indicates the nature of market volatility. How is the standard error bands indicator created? To create the standard error bands indicator, you need to follow these steps. First, you calculate a 21-period linear regression line and the standard error of the regression line. Next, you get a 3-period simple moving average of both the linear regression line and the standard error to smooth both data. Then, you plot the upper band by adding 2 smooth standard errors to the smooth linear regression line and the lower band by subtracting 2 smooth standard errors from the smooth linear regression line. Now let's show you the standard error band strategy. We backtested the strategy on all stocks included in the S&P 500 from 1990 until today, so there is no survivorship bias. However, we backtested only stocks that closed above $10 and had an average volume of at least 5 million shares traded. The trading rules are simple. We use the standard settings of the indicator. We buy at the close when the close breaks below the lower band, as long as the close is above the 200-day moving average. We close our position when the close breaks above the middle band. Here's the equity curve after factoring in a 0.03% commission for each trade. That is 0.06% for a round trip. This is huge, over 20 times the initial investment. There are many trades, and the average gain per trade is 0.67%. It has an impressive win rate of 64%, with an annual return of 9.3%, and a risk-adjusted return of 28%. A maximum drawdown of 22% is not too much for those who can stomach the risk. If you like this video, please like and subscribe.